Hi, it's Jack here at System Trader, and in this very short video I'm going to show you how you can quickly build and test and then monitor your own passive portfolio using ETFs and using my software System Trader. So let's get started. Let's assume that you would like to build a very simple portfolio so that we can quickly show that as a practical example, which is built of two ETFs with 60% of American stocks, S&P 500 index, and 40% of American bonds, let's say 10-year government bonds. So in order to do that, you have to go in the backtester to the Add button and click Pie Chart Investing. And let's name that portfolio as 60/40. And then let's see how to set all the things here. So as the currency, we will keep American dollar and the start equity $100,000. And let's say that we want to rebalance that portfolio once a month, but only if there is a deviation of any of the component of that portfolio bigger than 20%. So that doesn't mean that we will in fact rebalance each month, but each month we are only checking if that particular condition is met. So it may happen that in fact for years even the portfolio is not rebalanced because none of the components of that portfolio deviated more than 20% either way. And let's see how we can build that portfolio. As now you can see on that picture, there's nothing in our portfolio. So let's press button Add, and we see the first empty row, and then click on that button here, and we can select the first ETF. So let's say that we will put here the portfolio SPY ETF, which is the ETF for S&P 500 index. And let's make 60% weight for that ETF. And as you can see here, it's already visible on the picture. And now add another component, another empty row. And now let's put there another ETF, but this time ETF for Treasury bond, 7 to 10 year. And it's an American ETF which is listed in the United States. If you are from other parts of the world and you don't have access to that ETF, you may use any ETF which is available for you. In the software, you have access to over 70 stock exchanges worldwide so that you can easily import that data. And there's another video which shows how to import data to the application. Let's put here 40%. And as you can see, we have our portfolio built. We have 60% of S&P 500 and 40% of 7 to 10 year Treasury bond ETF. And as we can see, ETF currency is American dollar. Now let's say that we want to set the transaction costs, and I will keep the default values here. And we don't have any cash flows. We don't contribute or we don't withdraw any money from that portfolio. Let's save that. And as we can see, it's been added here, it's available, and we can backtest that portfolio. Let's select all, which means that we will backtest that portfolio for the whole available period. And I press test, and now the backtest is behind being calculated. It's asking me if I want to do the rebalancing. No, I don't want to do that. And we will have results pretty quickly. And the results are starting from 2002, and it's because the ETF which I used are not allowing us to go further beyond that date, because this is the inception date of the ETF, and in that case for the bonds, because the SPY ETF has a longer history, but basically because the bond ETF has a shorter history, we can only go back to the year 2002. And we can see all the details here. We can read the full report of the results. We can see that month by month. We can see the performance. We can see how it looks. And we can see, for example, the rebalancing history. And for example, we can see that in March 2021, there was a rebalancing. As we can see, S&P part grew to almost to over 68%, whereas the bond part from 40% dropped to 31%. So the condition that if any of the component is deviating more than 20% has been met. Therefore, we had to sell a bit of SPY and buy a bit of IEF ETF for bonds, so that in the end we have again 60-40, almost 60-40, because we are using the real, let's say, capital, so we cannot always spend all the money. So we have a fraction of a small part of cash which is not invested, because we cannot buy fraction of ETF shares. But that's a detail. And let's assume that we'd like to see how that portfolio is performing over the longer period. So that let's go back again to the settings of that portfolio and go back to the money management. And as you can see here, there's another column here called backfill name. And we can put here the data which is going much further than the data for ETFs, which typically have a short history. They typically have 10, even sometimes less years of history. And in that particular case, we had the history going back to 2002. So how to add the data here? In System Trader software, you have a built-in historical data, which is going even decades back in history. And it's under the System Trader group. And here, for the S&P 500, we can select here the S&P 500. And as you can see, you have ETF data and you have backfill data, which is coming from S&P 500. For the S&P 500 coming from the System Trader group. And we do the same for the bonds part. And again, go to System Trader. And then for the bonds, we have 10-year government bonds, historical data. This data, as I said, is built into the application. So now you have this set, the backfill, and you can save it and do again the simulation. And now the simulation will take much longer than before, because now rather than 20 years of history, even less than 20 years of history, we will go much further back in history to see how that particular portfolio, 60-40, very classic portfolio, performed. And in fact, we were able to go back to the year 1920. So we have over 100 years of history of that portfolio. We see the results here. We can again check all the details for that portfolio, how it performed. We can also do the rebalancing history and so on and so forth. So basically the same things as before, but for much longer period, as you can see, from 1920 till the last day of the ETF when it was refreshed. I mean, the data was refreshed, and the data for ETF is automatically refreshed when you open the application. So if you import the data, it will automatically import it, refresh, update the data, so that always you have access to the latest date when you do the simulation. And just to make it a bit more even practical, let's say that you would like to also maybe see how that portfolio is performing in other currencies. So let's say that you are not in United States, but you are, let's say, in, in Australia, and you would like to see how that portfolio performed when you convert the results to the Australian dollar. Because if you are living in Australia, then it's more important to you to know how that portfolio is performing when you convert the performance to Australian dollar. And then you can see the history, which is shorter than before, but basically you can see all the results here similarly as before, but they are now converted to Australian dollar. And there is also a possibility that you define the cash flows to your portfolio. So let's say you can simulate that you are contributing fixed amount to your portfolio. I don't know, once a month or once per quarter or annually, or that you are withdrawing some money from your account, from a portfolio when you, let's say, are during retirement. Then you can say that you want withdraw a particular amount each month or each year, or particular percentage of the value of your portfolio. And then once you set that here, you can do the test again and see how the portfolio was performing. That's all from my side. I hope that it was helpful to you. Enjoy. Bye bye.